Nifty. Let's see whether the 30 minutes, the bulls can drive home some gains. They would like a finish closer to around that 17,000 odd mark. But buying the dip has worked today because you recovered 110 points from the day's low. The bulls will feel they're living to fight another day. That said, let's get straight to Alpha Manager of the day, Neil Bahal, founder and CEO at Negen Capital PMS, who joins us. Hi, Neil. Always good to speak to you. Well, the markets are a little bit jittery, but for people like you who are building portfolios for your clients, well, it could be the most opportune time. So a couple of questions out here. One is, what was the cash that you all had, say, a couple of months back? And have you all deployed that cash? And the second part is, you have an interesting thought that investors all over are getting a little bit jittery. But founders of companies, well, they are backing the India story. They are saying a year or two, maybe in fact things will be jittery. But from a 10-year perspective, India is on the way up. Run us through those themes where you see longer term stories pick up.
Hi, Nigel. Thank you for inviting me. It's always a pleasure to be here. In terms of cash, we've been cautious. We had about 15% in cash across the PMS until 2 or 3 months ago. And with that has come down to 4% now. We are deploying over here. And coming to your second part of the question is absolutely perfect. If you see the cement space, about 1 trillion rupees worth of capex is going on currently. If you talk about chemicals, across the board, all of the strong players are doing capex. Even if you see pharma, there's a lot of capex going on, but the investor community is a little bit upset. And that's the thing with Mr. Market. Mr. Market will keep going up and down. It'll behave happy, it'll behave sad. But what we have to do is we have to have a stable approach, and we need to see what the founders are doing. If the founders were also selling shares, then I would say, okay, fine, sell everything and run away. But here, what we are seeing is the promoters, they are pumping in a lot of money into their own businesses. So the question is, do you want to take a view of the next 2 quarters, 3 quarters, or you want to take a view alongside the promoters of the next 4 years, 5 years, 10 years? I think money will be made in India because the GDP will keep growing. Even if there's a recessionary kind of a situation outside, India will still manage to grow somewhat. And even though the stock market may not do good every year, it'll all come back at once after a few years. So our job is to keep doing the SIP, not be too unhappy when the markets go down, not be too happy when the markets go up. Just continue with the game and continue with the flow. Follow the smart money. And the smart money is definitely doing capex right now.
Okay, so you're preaching detachment, I suppose, Neil. Hi, Surabhi here. And that's a virtue, right? If you can do that in life or in your investments, you end up being a happier person, perhaps. By the way, the market's trying to recover pretty well. We are down about 130 points, much better off than the 200-point slide that we had earlier in the day. Neil, one thing kind of caught my eye. Nigel was telling us about some of your investments and the thesis. And it seems that you're still holding a positive view on IT. And that's quite interesting, given that everything that's been happening. There's a 20% cut on the IT index already, and a lot of uncertainty about what happens in the US, banks, tech spending, etc., etc. What makes you optimistic?
So I'm optimistic that IT will be needed. Currently, we don't own any IT stock in the portfolio, not even one. But we are looking at a lot of these. As soon as the valuations come in the range, we will get back into IT. And, a lot of things are going on, especially around AI, artificial intelligence. It's still early days, but if, a lot of people are going to things like ChatGPT, and it's just changing the way people are looking at a lot of things. So if businesses need to survive, there will be a lot of spend on IT going forward. So, IT as a space, I think they are going into a period where there is a little bit of uncertainty in terms of how artificial intelligence will, but my view is that AI will benefit the IT space in a big way. The profitability, the productivity, everything is going to rise. So if the valuations were to keep coming down, all we have to do is say thank you to the stock market, find the stocks that are cheap, find especially things where there could be some special situations where, a struggling IT name gets taken over by a big player. Something where there's a demerger, delisting, something like that can give you a little bit extra margin of safety in terms of valuations. That could be a way to go.
But you mentioned things like AI, Chat, GPT. I mean, I'm guessing you're looking to then play this through US stocks, or do you see those opportunities in India? I mean, there are very few companies. I remember we had a conversation with the Intellect Design. They're looking at certain smart solutions. But again, then will you look out for US stocks, or would you look out for the Indian players?
No, so what I meant to say is that how artificial intelligence will replace a lot of, or displace a lot of jobs. The repetitive work where you're spending a lot of money on people, those guys will not be needed anymore. So from a company's perspective, their margins are likely to be strong as well, or maybe even rise going forward. So productivity wise, I think a lot of these companies are going to benefit from the advent of AI. So, I mean, AI is one thing, but overall, any company in the world who wants to remain competitive has to spend on IT. So, I think it's a very, very good thing for investors. What is going on? That valuations are coming to a decent level. I still think valuations need to come down more, but it's a good basket approach. You don't even need to do too much. Just identify the IT ETF and just start, doing small purchases of that every month. You'll be fine.
Neil, you spoke about promoters being very bullish and optimistic about their markets, but in the last couple of weeks, we've seen so many block deals. Biocon sold in Syngene, you had M&M selling, Mahindra Group selling in Mahindra CIE, Samvardhan Wiring's promoters sold stake in December of last year, Ajanta Pharma sold stake in the company, the promoters there. So in fact, we've seen a lot of block deals where key investors or promoters have actually brought their stake lower. Isn't that giving you a conflicting sign?
Yeah, so investors are different, right? Investors have to sell because their fund cycles are there, or even financial investors, they have to sell. So I would not consider a big investor like wanting to sell out of a business. That's okay, but I would be concerned if across the board, if the promoters started selling their shares. So, and yeah, from once in a while, here and there will be some promoter which is selling, but from what largely we are seeing, a lot of capex is going on, and this is a time to be bullish on India. And not, it's okay. Markets will not always just go up. And whenever markets go down, you need to identify a basket of, stocks, diversify very well, identify where you can get an edge on valuations, and just, stay invested, keep doing SIP. It's a very simple thing to do.
Okay, all right. Neil, talking about a basket of stocks, you have a contra view on pharma. Here in Mumbai itself, most of us have gone through a bit of a flu post-COVID. Some of the children are struggling as well with the cough. I think antibiotic sales must be going through the roof. But from the pharma pack itself, what is the basket you are building? That's your contra trade, right? You believe in the next few years, pharma could come out of nowhere and start performing, which it hasn't done in the last many years. So if you could name a few stocks and tell us the rationale.
So, Nigel, you're absolutely right. During the COVID time, everybody was at home. People took care of themselves. They were not going. There were no kids' parties. There were, people were taking care that they should not catch an infection. So, there were largely no flu cycle last couple of years. No one fell sick. But now suddenly, if you see across India, you ask, my own children have been sick recently, and I talked to all my friends. Everybody is sick, adults, but mostly children. And pollution is there again. You don't need to do something very high level thinking on pharma. Do something basic, as you said, antibiotics. You don't even need to do any channel checks. You don't need to do any scuttlebutt. It's a given that antibiotic sales are up a lot. So, you can just go and figure out which of the companies are into the antibiotic space, and you can just invest there. Yeah, and if you actually end up doing some channel checks, you'll know that the sales are very, very strong. So I think pharma, this kind of sectors will not remain down for too much time because of lifestyles. The lifestyle choices of people are such that people are going to be in trouble, sooner or later. So I think pharma should be part of the portfolio here. The valuations are pretty decent, and sooner or later the pharma cycle will revive on a complete broader level.
Okay, all right, Neil, got that. We will leave it on that note for today. Thank you for joining in, and you have a good rest of the day. The market is actually having a pretty decent afternoon, and you're finding us say that despite the 100-point fall, because this was a 200-point fall just a couple of hours back. So the recovery is also quite strong, and it's actually gathering some more momentum. So this is not bad at all. We still have 20 minutes to go. We'll take that break and come back, keep tracking this recovery and this move, and also get you some trading calls for the last couple of minutes.